What's going on, guys? Today I'll be going over my Robinhood portfolio in February of 2019. So in this video, I'll just simply be looking at all the stocks I own and also how well my portfolio has been doing over the past month or so. And before I get into the video, I actually want to do a new video series on my channel, which I've told you guys about in the community tab. And if you're in the Facebook group, I've told you about it in there as well, where basically you guys send me like pictures or videos of you, looking at your own portfolio, whether it be on the Robinhood app or M1 Finance or somewhere else. And then I kind of combine a couple of those together and make a video of my own talking about it and commenting on them. So let me know in the comment section if you're interested. If you are interested, definitely shoot me a DM on Instagram or Twitter, or tweet at me, or go to the Facebook group and put a message there. Just definitely get in contact with me in one way or another besides just the comment section, so you could actually figure out a way to send me that video if you're interested in that. But other than that, getting onto the video, I'm going to pull up my Robinhood portfolio right here, and it should be up now. And let's see, we'll see how my portfolio has been doing. So the past week up almost 2.5%, past month up a little over 9%. So it has been doing pretty decent over the past month or so, which is good. Overall stock market's actually been doing pretty well over the past couple of weeks. And I'm just going to start off by going through my portfolio. So first stock here is Microsoft. I have 3 shares of them, average cost $85. Microsoft's actually one of the better growth stocks in my portfolio too. My total return on them, 19%, almost 20. Microsoft, really solid tech stock overall in my opinion. Next is Facebook, and Facebook has been down a pretty considerable amount. I mean, if you got them at below 130, that was definitely a huge steal in my opinion. They're already up quite a bit since then. I wish I could have added a couple more shares of them, but still in the green there because my average cost on them is so low. Next is going to be Twitter, and Twitter, I have 1 share of them. Let's see, my average cost is pretty low actually, on $20 or so, up 61% on Twitter. So Twitter's definitely been a pretty strong growth stock. PE ratio around 24 on them. That's actually pretty low. I didn't think it was that low because it must, I wonder what their forward PE is right now. But Twitter actually had some pretty decent growth. They're kind of up and down though. But as far as I've owned them, I mean, I bought them a while back. I bought them at $20, so I've definitely had some good growth there. Next is Intel. I have 1 share of them. Total return up 40% on Intel. Pretty decent there. Really low PE ratio actually, and pretty good dividend yield on them. One of the tech companies I like, one of the safer bets I think. They've been having some pretty decent growth over the past few years as well. After that is AT&T. I think I'm slightly, down 10% on AT&T actually, but AT&T has, I don't think that 7% yield's actually super accurate. I think it's closer to 6, but might have to double check that. Robinhood doesn't update their stats as often as they should, but AT&T has actually been down a considerable amount, as you can see here, pretty significantly in the red. I think they're actually at a super great buy-in point right now, and especially with that dividend yield, it's hard to go wrong there. Next is Apple. I have 3 shares of them, up a little bit on Apple, not too much actually because they've been down kind of recently, and I bought a little bit high. My average cost is up a little bit on them, but as you can see right here, pretty significant dip. And once again, another stock, if you got below that 150, I think that's a pretty good buy. And actually with Apple, that's probably like a really good buy. Next on the list is Pepsi. I have 2 shares of them, average cost $106. I'm up 5% on them. Pepsi, pretty nice PE ratio, pretty nice dividend yield as well. Not a bad stock I like. After that is Coca-Cola. I have 2 shares of them, up 14% on Coca-Cola. Their PE ratio, it seems a little bit high. They have a really nice dividend yield though, well above 3%. And Coca-Cola has actually been a pretty nice growth stock. I know recently someone on my channel commented they're waiting for a dip for them, and so far they've been doing pretty well over the past couple of months or so. Next is Colgate. I am slightly down on them actually. They have a very nice yield, almost 3%, and I thought they were at a really good buy at right where I bought them, but honestly they dipped a little bit lower just because the rest of the stock market dipped down. So another stock, I think if you got below $60 on them, that was probably a pretty good buy. After that is Nike. Nike, another great growth stock in my portfolio, up almost 40% on them. They don't have a super high dividend yield, one of the few stocks in my portfolio that don't, but I definitely think it's one of those stocks that's going to continue to raise it. Let's see how they've been doing actually past year, pretty decent, past 5 years, pretty decent as well. After that is GM. I have 2 shares on them. I'm slightly down there. I think I sold off a couple shares not too long ago. GM, they've been struggling a bit. One company that I think definitely will get hit very hard by the trade war thing going on with US and China. It's one of those stocks that has, I don't know, I guess it's just one of those pretty obvious companies. I think they'll actually get hit hard by it. But anyways, next stock is Netflix. I have one share of Netflix. They've been a huge growth stock in my portfolio. They've actually been the highest growth stock in my portfolio for quite some time. No dividend yield on them, pretty high PE ratio, but if we look at how Netflix has done in the past year, 5 years, I mean, they've had enormous growth, and I think if you were able, once again, to get them at that 250 mark around, that was probably a really, really good buy. After that is McDonald's. I have one share of them, up a little bit on 12%. Nice dividend yield here. McDonald's is just your kind of typical blue chip dividend yielding stock. Nothing too crazy here. They're actually still at a pretty decent buy-in point. You know, they're not quite as low, but they might have a little bit more room to dip down. But that's, you know, a great one to buy when they're on a dip, just because it's probably one of those stocks you'd hold for the next 10, 15 years or so. Next on the list is Walmart. Slightly down on them still. I thought I was up at one point, then I went back down. Their price has been a little bit volatile. Yeah, see here, pretty big dip here, like most of the rest of the stocks you're going to see. I think I bought them, I can't remember when, maybe in this range more. I waited too long to buy them. I remember I was looking at them like during this time, but I never actually ended up buying them. I was still waiting for them to go down more, and that never ended up happening. But Walmart, still one of the few retail stocks I would definitely feel comfortable in investing. After that is Starbucks. I have 4 shares of them, up 25% on Starbucks. Starbucks definitely had a pretty nice year compared to some other stocks. They didn't really dip down too much, and one that's been a better recent growth stock in my portfolio, actually. Decent little dividend yield on them, only 2% or so. My average cost $54, so not bad at all there. Next on the list is 3M. I'm down a little bit on 3M, actually. This was another one that you could have averaged down on and that you actually still can. This one's actually still on a dip here. This one is definitely more of a long-term play, so I might average down, might not. I don't really feel like I need to add more weight into this specific sector of my portfolio. But anyways, next stock, Boeing. I have 1 share of them, another huge growth stock in my portfolio. Bought them at 200. My total return over almost 90, or I should say a little over 93%. Pretty low dividend yield on them, or actually I was going to say pretty decent dividend yield and pretty good PE ratio on them, especially, you know, because they're just having just monstrous growth over the past couple of years or so. Next on the list, Johnson & Johnson. I'm up a little bit on them. I was up a lot more, but then they got a lot of scrutiny after like a recent report. As you can see, like right here, there was like a report that they were, I wasn't even actually 100% sure what happened. There was like a bunch of stuff going on, but basically they were doing some shady stuff they shouldn't have been a long time ago, and the price dipped down because of that. I don't think they're doing it anymore, so I'm not really too worried about that in terms of the, you know, stock's long-term potential or anything. Next stock is Pfizer. I have 2 shares of them. Average cost $33. They have actually a really nice dividend yield, over 3%, and a pretty decent PE ratio as well. And they've actually had some pretty decent growth this past year compared to some other stocks out there. Next on the list is AbbVie. AbbVie is another one that's down a lot, and I think they're at a really, really good buy-in point, actually. I'm still up on them because I bought them a while back. They have a really, really nice dividend yield as well, and I actually am not entirely sure why they keep selling off so much. I know obviously a lot of other stocks have been selling off along with it, but I think they're actually at a really good buy-in point right now. Next stock on the list is Morgan Stanley. Down a little bit on them. Financials definitely got hit really hard. They actually have a super low PE ratio right now, but of 8, that actually is pretty low. Pretty nice dividend yield on them as well. And Morgan Stanley, a lot of the financial stocks, as you can see, which when I go over to like Bank of America, KeyBank, Main Street, a lot of financial stocks have actually been getting hit pretty hard, especially compared to some other stocks out there. Next on the list is PayPal. PayPal has also been a really nice grower in my portfolio, up 54% on them. Kind of high PE ratio there though. Next on the list, Bank of America, another financial stock that's been down quite a bit. If you look here, pretty huge dip. I mean, that's a lot bigger than some of the other stocks in my portfolio, but still a solid buy in my opinion. After that is KeyBank. I have 1 share of them. KeyBank also down, see, pretty big dip. You'll kind of see the same tendencies from, you know, stocks that are in the same industry there. Pretty low PE ratio there and high dividend yield as well. After that is Main Street Capital. It's actually a monthly dividend stock. I'm slightly down on them, but when you take in that almost 6% dividend yield that I've been getting consistently every single month, I'm probably up on them, I'd have to assume, because I've actually owned them for a very, very long time. And yeah, if we Look at this. Yes, I've definitely owned them for a while here. As you can see, all these dividend yields coming through, and that's obviously, added up to more than I don't even know how much I'm down on them right now. Probably only a couple of cents or something. Yeah, 49 cents. So that definitely makes up for that. Next on the list is Realty Income. I have one share of them, up actually a pretty decent amount for being a monthly dividend stock there. I think I just got them at a good buy-in point, but like I just said, is another monthly dividend stock in my portfolio. Over a 4% dividend yield on them. That's probably my favorite monthly dividend stock, I would say. After that is Dow DuPont. Dow DuPont, I think, is the worst performing stock right now still in my portfolio. They actually got a decent dividend yield. I probably bought them a little bit too soon. That was why I usually don't buy stocks right after like any mergers or when they IPO or anything like that. And this is kind of the reason why here, because I feel like a lot of investors don't really know what to do, and when they don't know what to do, they usually sell. So after that is Southern. I have one share of them. I'm up a little bit there. Southern actually has a really great dividend yield on them, almost 5% dividend yield, so I really like Southern quite a bit. After that is SPHD, ProShares S&P 500 High Dividend Low Volatility ETF. I'm up slightly on them, but they are actually another monthly dividend. Not another, but they give you a monthly dividend yield, and they are an ETF, so I was going to call them a stock, but they're not a stock. Over 4% on that dividend yield as well, so that's nice there. After that is Vanguard S&P 500 ETF. I have one share of them, up 11%. That's just, obviously mirroring the S&P 500, so, not really much surprising there. And I think this is the last thing in my portfolio as well, is ProShares S&P 500 Dividend Aristocrats ETF. Up slightly on them as well, and obviously, as the name says, they just mirror the Dividend Aristocrats, so nothing too crazy there. And those three at the bottom there, as PhD, VU, and Noble, are the only three ETFs I own. So anyways, guys, as I'm closing this out, I'm just going to quickly scroll through my portfolio. But if you're new to the channel, I talk about investing, the stock market, personal finance, entrepreneurship, things like that. So if you're interested in any of that kind of stuff, definitely head over to my channel, check it out, and consider subscribing. And if you like the video, definitely leave a like and comment below what you think of my portfolio and my stocks and, all the stocks I own. Maybe you own some of the same, maybe you don't. Let me know. I like hearing what you guys have to say. And like I said in the beginning of the video, I'm going to be doing a new video series. So if you've been interested in sharing your portfolio with me, whether it be on the Robinhood app, M1 Finance app, it doesn't really matter. And I'll be combining these videos and putting them into a video of my own and then commenting on them. So if you'd be interested in that, definitely let me know. Hit me up on Twitter, Instagram, Facebook, doesn't really matter. Just do something besides the comment section so I can actually have a little bit better communication there. But other than that, guys, thanks for watching.